The summary of MFRS 124 Related Party Disclosure. MFRS 124 Related Party Disclosures includes copyright content by the IFRS Foundation and has been reproduced in this publication with the organization consents. The MASP has released MFRS 124 Related Party Disclosure regarding its implementation in Malaysia. The standard aims to make sure that an entity's financial statements have all the disclosure required to highlight the possibility that related parties' existence, as well as transaction and outstanding balance, including commitments with them, may have had an impact on the entity's profit or loss and financial position. The standard requires disclosure or related party relationship, transaction and outstanding balance, including commitments in the consolidated and separate financial statement of a parent or investor with joint control of or significant influence over an investee presented by MFRS 10 consolidated financial statements or MFRS 127 separate financial statements. The standard also applies to individual financial statements. The Malaysian Accounting Standards Board's MASB issued MFRS 124 Related Party Disclosure in November 2011. Regarding the practical and insurance dates, MFRS 124 Related Party Disclosure is comparable to IAS 24 Related Party Disclosure as published and modified by the IASB. Organizations that follow MFRS 124 will also follow IAS 24 simultaneously. Theories of the development of MFRS 124 Related Party Disclosure. This section is the study about theories surrounding the development of MFRS 124 Related Party Disclosure, which is a crucial aspect of financial reporting. The evolution of the standard has been influenced by various theories. The first one is normative theory. Normative theory adopts a subjective methodology and is typically included in a company's business or marketing plan. It attempts to describe the financial future of a corporation based on abstract concepts. This normative theory is relevant to MFRS 124 as it involves selecting and applying accounting policies, which require ethical consideration to ensure transparency and accuracy in financial reporting. Second is positive theory. Regarding data collection and bookkeeping, positive theory is most used objectively. It evaluates and ascertains the consequences of these expenses by utilizing a company's historical physical transaction records. It measures revenue against expenses to determine whether and why a business is operating at a net loss or gain. In the context of MFRS 124 Related Party Disclosure, positive theory can help explain how the selection of accounting policy is influenced by factors such as market force, economic condition, and the behavior of market participants. The third theory is regulatory theory. The regulatory refer to the role of government, agency, and standard-setting bodies in forming and structuring the regulations, accounting principles, and all the guidelines for the users that govern how financial accounting should be conducted to meet the standard. This method or approach is based on the idea that accounting theory must be developed by first identifying account users. The regulatory theory provide valuable insight into the development and formulation of MFRS 124 Related Party Disclosure, offering a comprehensive understanding of the regulatory dynamics that shape accounting standard within the global context. In summary for this section, this theoretical approach taken together highlight the intricacy and interconnection inherent in the construction and structuring of MFRS 124 Related Party Disclosure. The standards are formed not only by ethical consideration and actual observation, but also by worldwide accounting standards and regulatory movements.
Assalamualaikum and hi, my name is Shazleen with Mohamed and my measure number is 288493. I will be explaining about the main parties that are involved in the development or formulation of the MFRS 124 Related Party Disclosure. There are three main parties that are involved in the development of MFRS 124, which is International Accounting Standard Board, Malaysian Accounting Standard Board, and Malaysian Institute of Accountants. First and foremost is International Accounting Standard Board. International Accounting Standard Board, or IASB, is the primary party that is responsible for developing and formulating the MFRS 1 to 4 related party disclosure. MFRS 1 to 4 is equivalent to the IAS 24. Initially, IAS 24 was originally issued by International Accounting Standard Committee during 1994. The International Accounting Standard Board adopted IAS 24 International Accounting Standard Committee in April 2001. During December 2003, the IASB has revised IAS 24, reflecting changes from the improvement project. The IASB changed IAS 24 once again to address the disclosure in government-related firms. In 2009, a revised version of IAS 24 was released by the International Accounting Standard Board again, which makes it easier for the government-related entities to disclose their information and define what is the related party is, and the standard was effective from January 2011. Next is Malaysian Accounting Standard Board, or MASB. In Malaysia, MASB oversees the settings and upholding the financial reporting rules. MFRS 1 to 4 has been adopted in Malaysia on 2004, and there was some revising happened on IAS 24. The standard has been effective from 1 January 2006. MASB also organizes outreach initiative, organizes and attend local and international conference, public forum, working group meetings, and teleconference to interact with a variety of stakeholders, both locally and globally, related with the MFRS. In addition, MASB also conducted several standard-specific meetings concerning about the MFRS 1 to 4 related party disclosure, as well as MFRS conference calls with the publicly traded companies with the auditors. Not only that, MASB also conducted many educational seminars with academics and institutions. Lastly is Malaysian Institute of Accountants. Malaysian Institute of Accountants played a vital role and unique part in the complex procedure of developing and implementing the MFRS 1 to 4 related party disclosure. According to the article Webmaster, the nature of related party transaction and details concerning transaction and outstanding balances, including any obligation that requires for users to comprehend the relationship's possible impact in the financial statement, it must be disclosed by the entities whenever it is significant. An entity-related party disclosure are typically contained in a separate note in the financial statements. As an alternative, additional notes to the financial statement cover some related party disclosures, such as compensation received by the senior management, the relationship between the entities of the group, and the intercompany balances. That's all from me. Thank you.
Hello everyone, my name is Siti Binti Ruslan, and today I will be discussing the nature of MFRS 1 to 4 related party disclosure. So, we will discuss about whether it is principle-based or rule-based. Alright, let's begin by understanding the fundamental difference between principle-based and rule-based accounting standards. While rule-based standards are prescribed specific action, principle-based standards emphasize communication and guide practitioners in making optimal judgment and decision. MFRS 1 to 4 aligns with the principle-based approach, making it less specific but more accessible to users. This flexibility is essential, especially in complex scenarios where rules might not be immediately applicable. MFRS 1 to 4 is a principle-based accounting standard because it's aligned with the concept of positive accounting theory. Positive accounting theory suggests that individuals driven by self-interest use professional judgment to optimize their own benefits. MFRS 1 to 4 enables professionals to make decisions based on economic principles and actual outcomes. Next, MFRS 1 to 4 is characterized as principle-based standards since agency theory emphasizes flexibility in accounting standards to meet varied user and stakeholders' requirements. MFRS 1 to 4 adaptable structure allow companies, for example, like XYZ Corporation, to choose disclosure approach aligned with their unique situation. So the next one is Efficient Securities Market Hypothesis, which is ESMH alignments. ESMH asserts that securities market are efficient when asset price represent information accurately. MFRS 124, adhering to ESMH requirements firms to report related party transaction, considering not only legal but also economic aspects, contributing to market efficiency. So, in conclusion, MFRS 124 stands out as a principle-based accounting standard emphasizing professional judgment, adaptability, and transparency. Its alignment with the positive accounting theory, agency theory, and also ESMH collectively contribute to its effectiveness in financial reporting. So that's all for nature of MFRS 124. Thank you for your attention. I pass to the next presenter.
Is the limitation of MFRS 124 related party disclosure. So the first limitation is about the variation in interpretation and implementation of the standard MFRS 124. The difference in interpretation might lead to the possible of inconsistencies in disclosing the transaction that is made by the related party in the financial statements. It also might lead to the inaccurate statements in the financial statements. And according to the MIPA 2022, the difference in the content of the related party transactions in different type of standards such as MFRS 124, IAS 24, and also the MPSAS 20 might lead to the different understanding in accountant or practitioners in disclosing about the related party transactions. So it will be hard for them to make a uniform interpretation and uniform understandings. So the disclosure will be not accurate. And second limitation is the key personnel management compensations does not perform a comprehensive disclosure. Currently, the compensation is categorized into 5 categories, 5 specific categories, and it might not be sufficient since if a transaction that is not related to the 5 categories, then the transaction possible to not disclose in the financial statement. So this will lead to the lack of information about the related party transactions, and the information that is not disclosed might be useful for the users. So according to the IASB 2010, the assumption of the disclosure about the transactions might lead to the misconduct of the management. They can manipulate the transaction or manipulate the information about the transactions for their own purpose. So it's not good. The third limitation is about the completeness of the disclosure and documentation. The transaction that is not routine or recurring will not be the attention of the entities. They hard to capture the information about the transaction that is not routine. So they also don't have the experience in keeping the records about the transactions. So it will be hard for the accountant to disclose about the transaction that is not routine, and this will not be sufficient for them to disclose the information about the related party transactions. And the complex transaction that is occur in the company also should be the focus for the companies to record all the information regarding the complex transactions, since it is usually about the complex transaction, the document is not sufficient, or the entities might not save the document properly. So it might be difficult for the accountants to prepare the disclosure about the related party transaction when the record is not sufficient. So we move to the next.
Assalamualaikum warahmatullahi wabarakatuh. My name is Hasnah Binti Ashari with number metric 288302. So today I will present 2 points about the limitations of MFRS 124, which is related parties disclosure. Okay, for first point is subjectivity in identification of related parties. It can be difficult to identify related parties, particularly in complicated business structures or international organizations. The complexities involved in figuring out related party connections and transactions could not be adequately covered by the standard. Determining related parties can be difficult in huge firms with intricate subsidiaries, joint ventures, and connected companies. Understanding the organizational hierarchy and legal relations in detail may be necessary to identify the relationships and transactions with such systems. Diverse interpretation in determining related parties require evaluating the nature of connections and exchange, and various entities may have diverse ideas about what constitutes a suitable match. The possibility of clients failing to identify or disclose related party relationships and transactions exists because they may do it because of a lack of awareness of the relationships that fall under the definition, fail to recognize the need to do so, or they use unidentified related parties as a cover for financial reporting or fraudulent activity. For instance, it can be subjective to decide what degree of influence or control creates a related party relationship. A distinct entity may have a different threshold for what defines significant ownership than one that. Then, to ascertain related party relationships, MFRS 124 depends on expert judgment. In accounting, professional judgment is crucial, but it's also introduced subjectivity because it is dependent on the judgment and experience of the people making the decisions. Regarding related party status, different accounting experts may reach different findings, so at least is limited guidance on maturity. Regarding related party transactions, there is no explicit advice on what is considered maturity in the standard. There may be variations in what's substantial for disclosure due to entities' discretion in setting maturity requirements. The insufficient guidance on maturity in the context of related parties transactions is one of the issues with MFRS 124. It is common for related party transactions to occur in the course of business. In certain situations, there may be a smaller risk of substantial mispresentation of the financial statement than in transactions of a comparable nature involving related parties. The maturity describes the relevance or importance of information. Determining what is material requires considering the possibility that users' financial decision may be impacted by the information omission. It also will have an impact on decision making for the user. And it does not specifically instruct business on how to assess the maturity of related parties transactions in terms of how they affect users' ability to make decisions. Even if a related party transaction is numerically significant, entities may find it difficult to determine whether it has the potential to have a qualitatively significant impact on user decisions. In the case of related parties transaction, MFRS 124 does not offer any precise quantitative benchmark or suggestions for figuring out what is material. Consequently, to determine whether a specific related parties transaction is substantial, entities could have to rely on their judgment, which could result in arbitrary and possibly conflicting conclusions.
When there is limitations, there are also some suggestions to overcome the limitations of the related party disclosure MFRS 124. The first suggestion is about the reduction in the disparity of the related party disclosure content in the standards. It is necessary to revise the content of the related party disclosure in the standard, which is the MFRS 124, IAS 24, and also the MPSAS 20. The purpose is to reduce the differences in the content of the related party disclosure on those three standards. It is also necessary to provide the details on the difference of the content that cannot be changed so that the accountant know when and where to disclose the requirements that is different between those three standards in the financial statement. Second suggestion is about adding another one categories of the compensation in key personnel management compensation, which is the other compensations. Currently, it has 5 categories of compensations, and we suggest that we have to add another one category, which is other compensations. This is to ensure that all the transactions regarding the compensations is disclosed under the MFRS 124. It is also necessary to provide the details on how the informations and the requirements of the informations that should be disclosed under this category, which is the other composition, regarding the MFRS 124, so that the accountant will be easily understand and know what to be disclosed about the other composition under this standard MFRS 124. The third suggestion is about the implementations of the strategies and practices on MFRS 124. It is necessary to conduct a training or seminar for the practitioners in order to make them expert in implementing the MFRS 124, the related party disclosure, in the financial statements, so that the information that is disclosed in the financial statement will be accurate and relevant. And it is also important to provide a guideline of documentations so that the accountant know what they need and what they should have when preparing the disclosure of the related party transaction involved in the companies, so that the disclosure about the related party transaction is complete and follow the standard that is set by the regulatory bodies. Then we move to the next part.
Next, suggestion to overcome the limitation of MFRS 124 from my point in previous video. The first point is benchmarking and industry comparisons. Compare the related party identification criteria to the norms and best practices of the industry to make sure that identification criteria are in accordance with the current norms and expectations. It can be helpful to compare practices with peers in the business, assuming industry standards where we need to measure maturity levels in relation to industry norms and procedures. Considering industry-specific elements that could have affect the importance of related party connection and transactions. In addition, some kinds of related parties transactions are manipulable. As in illustrations, certain businesses lend money to another business owned by the same stockholders. This manipulation's goal is to direct revenue from activities to the majority stockholders. Through this action, the dominant shareholders are efficiently increasing their wealth at the expense of the wealth of minority shareholders. The information provided to the auditors by individuals in charge of the company's operation regarding all connected parties and the type of relationships is also mandatory. This will allow the auditor to assess the extent of work that needs to be done on the related parties transaction and provide an opinion on it. In addition, the auditor must evaluate the extent of adherence to pertinent to disclosure laws and provide a judgment on the sufficiency on the disclosed information. Last but not least is establish clear guidance maturity on MFRS 124 to be consistent, transparent, and effective in financial reporting. Maturity must be clearly defined. In accounting, maturity is a crucial notion that aids companies in assessing the importance of information for the users. The standard should take both qualitative and quantitative standards aspect into account when determining the maturity. Although numeric guidelines are supplied by quantitative threshold, qualitative factors such as type of related party transaction or transaction must also be considered. The rules for related parties disclosure is outlined in MFRS 124 and Bursa Malaysia listing guidelines, which apply to all publicly traded firms. By proving the related parties' interest exists, the corporation must disclose the transactions involving the related parties. In accordance with MFRS 124, paragraph 18, reporting entities are required to disclose information separately for each of the following categories: parent company, subsidiary, associate, joint venture, company, or its parents, and other related parties. In addition, the name of the relevant party, a description of the relationship between the associate parties is the kind of volume transaction. The outstanding balance must all be disclosed as part of his mandatory disclosure. Establish maturity parameters which are in the context of related party disclosures precisely specify what constitutes maturity. The standard should define the numeric benchmark that will be taken into consideration for maturity, such as a percentage of total assets. By applying this recommendation into practices, the organization can create a strong, precise set of guidelines of maturity in the context of disclosure from related parties in MFRS 124, which will improve the consistency and transparency of financial reporting.
Hello again. For this slide, as you can see here, this is a letter we have crafted to the Malaysian Accounting Standard Board (MASB) regarding our recommendation for enhancements to MFRS 124, specifically related to related party disclosure. So this letter, dated December 10, 2023, serves as a formal communication expressing our organization insights and suggestions to enhance the effectiveness of MFRS 124. So that's all from us. May you have a wonderful day, and once again, thank you.